So Facebook stock has been soaring lately. So in this video, I'm going to show you my cost basis in Facebook stock, what I think of the stock, how much I'm up on Facebook stock, and whether I'm going to buy or sell my shares of Facebook. Am I going to lock in my gains or try to make it a larger position? So this is going to be a jam-packed video with tons of information. So make sure to drop a like, subscribe, sit back and relax, and let's get right into it. So right now on Facebook stock, I currently have a cost basis of $138.67 per share. And as of right now, the stock is trading at about $202. So I'm up over 45%. And this is a huge gain, and given that I purchased the stock about a month and a half ago. The stock over that period of time has massively outperformed the market. So keep in mind, I purchased the stock only a month and a half ago. And a 45% gain over that period of time is really big. And if we take a look at the bottom of the stock chart, we can see that the 52-week low is $137.10. And I purchased it at $138. So I got a little bit lucky by purchasing it pretty much right at the bottom, about $1 off from the bottom. So that's pretty good. And ever since I purchased it, it's gone up about 45%. And if you compare it to the market, in about the same time frame, the S&P 500 has gone up about 18%, while my Facebook shares have gone up about 45%. So Facebook has been killing it in the market. So now let's talk about why it's been outperforming the S&P 500. What happened to the stock? So one of the major reasons why the stock has been going up recently has to do with their Q1 earnings results. Despite the pandemic, they had really good earnings during Q1 of this year. Right now on screen, I have a summary and some highlights of their earnings. And you can see that total revenue went up to $17 billion. And that double-digit growth is phenomenal for Facebook. You see their income from operations also go up 78%, which is huge. And their operating margin is also up dramatically. In 2020, it was 33%. And during 2019, it was 22%. So you're seeing huge growth potential still with Facebook stock, despite the pandemic severely affecting their business. Given that they released such good earnings, the stock really does have a lot of potential still during this period in time. But the big news that caused the stock to go up really dramatically is right here. They said after the initial steep decrease in advertising revenue in March, we have seen signs of stability reflected in the first 3 weeks of April, where advertising revenue has been approximately flat compared to the same period a year ago, down from the 17% year-over-year growth in first quarter of 2020. Facebook is expecting the revenue to be flat. They're not expecting it to fall anymore. They are also expecting their revenue to not grow nor fall compared to their revenue last year during Q2. What that means is that Facebook is kind of resistant and very resilient to the coronavirus. They're not going to take a huge impact. Their business is not taking a huge impact compared to many other businesses, and it caused their stock price to go up dramatically. And this piece of news is really good for investors because it shows that there's very little downside with the company itself, which is a really good sign for investors. So overall, they had really strong quarterly earnings results. Their revenues and net income were up dramatically, and they're also seeing a stability and no more decline in their earnings and sales. This means that there's very little downside potential with the actual company itself. So that has really caused their stock price to go up dramatically, and it has allowed me to get a 45% gain ever since I purchased it. Right now with Facebook stock, I have 3 options I can take. I can sell my shares, I can buy more shares, or I can just hold them. Well, for one, I'm definitely not selling my shares because I think this stock has so much potential. This company is too strong of a company for me to sell it. They're always consistently growing. According to this chart, we can see that Facebook has been consistently growing their monthly active users every quarter ever since 2008, which is just insane. And right now they have just surpassed 2.5 billion monthly active users. And as of right now, their monthly active users has still growing on a double-digit basis year over year. So they still have so much more growth opportunities. And as long as they continue to get more users on their platform, they're generating more ad revenue, which means more revenue and earnings, which means a higher stock price. So I definitely don't want to sell the stock because they still have so many growth opportunities. Also, Facebook just has such a dominant foot in the social media advertising market. Right now on screen, I have a chart of many major social media companies' reach. How many people do they reach? And we can see that Facebook, as of today, has the most reach by far. They have the most customers and people on their platform. The second largest social media platform is Instagram, and Facebook owns Instagram. And then it's followed by TikTok and a few others. But Facebook owns Facebook and Instagram. They own the two largest social media platforms. This is going to give them huge control over the social media marketing industry. And given that the industry is still growing, has tons of growth ahead of them, Facebook is going to be able to get so much market share just because their industry is growing. And their industry has so much potential. Right now in 2020, businesses as a whole in the United States of America are expected to spend about $97 billion on social media marketing. And in 2021, it's expected to be $107 billion. Then by 2024, $123 billion. So much more money is going to be spent in this industry by businesses. So many more businesses are going towards social media marketing. And the first two places people are going to go to are Facebook and Instagram to advertise their business because they're the two dominant platforms. They're the two platforms that most people use. So businesses need a presence on Facebook and Instagram. And given that more and more businesses are spending more money on social media marketing, Facebook and Instagram are going to get the largest portion of the amount of money spent in the social media marketing industry in the future because they're the two largest players. So they have tons of growth potential just due to their industries growing. Keep in mind that this only reflects ad spend in the United States. There is still so much opportunity in other countries, like in many countries in Europe and Asia, still have tons of potential to grow along with the US. So they're going to be able to grow their business astronomically. And right now on screen, I have a chart of how much it costs to advertise by country. We can see that the average CPC, or cost per click, in the United States is $1.09, and we can see that the average CPM, which is the cost per 1,000 impressions, is 22 cents on Facebook, on average. And when you compare it to other countries, it's significantly more expensive to advertise in the United States. Just because US consumers are more valuable, they tend to have more money than people in other countries. And you can see that across the advertising industry as a whole, people who live in the United States are more likely to make a purchase online than someone who lives in another country. So advertising is more expensive in the United States. Since it costs more for businesses to advertise in the United States, and since there's a general expectation for the amount of ad spend in the United States and social media marketing is expected to grow, we can see and we can assume that Facebook is going to make a ton of money just because Facebook traffic in the United States is so expensive. Advertisers on average have to pay $1.09 whenever someone clicks on their ad, which is just insane. It's a lot of money, and it's going to turn into a lot of revenue for Facebook, especially as more people are advertising in the United States. So overall, they have such a good future. And more recently, they created Messenger Rooms. And what Messenger Rooms is going to do is that it's going to bring people to the Facebook platform while they're staying at home during the stay-at-home order. And whenever someone goes on Messenger or Facebook or Instagram, they see an ad, and that means more money for Facebook. Whenever someone sees an ad, that turns into money for Facebook. So by just creating this video chat service, more people are going on Facebook and Messenger. That means more people are seeing ads, which turns into more money for Facebook. So by them offering this service, they're going to have a slight boost in their short-term revenue potential. So this is going to help them be more resistant to the coronavirus. So overall, there's such a huge potential in this stock. I would personally not want to sell this. They just have too much potential. So I'm not going to sell my shares of Facebook. But am I going to buy more shares? And I'm going to be honest, although they have so much growth potential, I'm personally not going to buy more shares for a couple reasons. First off, it's currently at a PE ratio of 27. And I personally think that that's just way too high for Facebook. It's a little too high for Facebook, even though they have so much growth opportunities. And I bought it at a PE ratio of about 1920-ish. So I don't want to just buy it at a significantly higher valuation. 7 more to a PE ratio is a lot. Why would I buy it in right now when there's so many more opportunities to get at a cheaper price below $200? Right now it's at $200 and there's so many opportunities in the market and so many opportunities when you can buy it when it's less than $200. So it doesn't make sense to buy it right now. I also don't want to lose an element of diversification. Right now, Facebook is about 22% of my portfolio. And if I just add more shares into it at a substantial amount, I'm going to lose some diversification in my portfolio. And I don't want to do that. I want to keep an element of diversification in my portfolio. And it's already a large enough position. So it just doesn't make sense for me to buy more shares unless they're at like a super, super steep discount. But even if I did not have a position right now in Facebook, I probably still wouldn't buy it. Once again, the PE ratio is just too high. But also, there's just so many opportunities for the stock to come at a lower price. Like whenever there's bad news in the stock takes a pretty big hit. You can see back during 2018, the stock took some pretty big hits, mainly due to the Cambridge Analytica scandal that Facebook was involved in. And then also, right now, due to the pandemic in 2020, Facebook took a huge hit because many people were assuming that they're not going to make much money at all because businesses are going to stop advertising. But it just seems like the stock was actually oversold, which allowed me to make a good amount of money in Facebook. So right now, I would not buy Facebook stock even if I did not have a position in it, just because there are going to be so many more opportunities in the future for it to come below $200 and at a better price. So overall, I don't think it's a stock to buy right now, but I think it's a very good company overall. The stock price just would need to come lower if I were going to buy more right now. But let me know what you guys think of Facebook stock. Are you looking at this stock? Do you want to buy it right now? If you have Facebook, what are you doing? And let me know down in the comments below. I would love to hear from you. And make sure to check out some of my other videos over here and over here. I'm currently starting another series on my channel called Buyer Beware, where I review stocks that are requested by the viewers. So if you want to see a specific stock reviewed on the channel, make sure to let me know down in the comments below, and I'll be happy to review it.